Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. Okay, so just to remind you, I've said repeatedly in this commentary for months and months that the most significant feature of this market has been the very significant lows of 2021 at 15,665, which led to the lows of late November 23 plus the lows in 24, most recently in late October, November and early December, and I suppose also the congestion in January and February this year. So I'll now reprise part of my commentary, the same part of my commentary I've given here for many months now, and I quote, "It is this point that I feel obliged once again to mention the big descending scallop pattern that I had been going on about for months and months and months, and what it may mean within the near-term universe." So the key level had been the lows at 15,840. A significant move below this, and by this I mean you would know it when you see it, a significant break below this could give a downside potential for the descending scallop pattern down to the 15,830 zone. End of quote. 3 weeks ago I added, and I quote, "For a while I even started thinking that this pattern's time had come and gone and maybe I should retire it completely. But I didn't." Well, for you, we definitely had, as I said, a significant move, one you would recognize when you saw it, and prices dropped down like a stone down to the 15,830 zone, a low at 15,865. All in all, it is satisfying to see such a move down to a target I've been prattling on about for many months, and to do it in a way that I suspected it might. As for what's next, well, we have just reached the end of a huge move, and I think it will require some more thought and observation to see what will be next. End of quote. So, my observations a few weeks onwards are these. The levels of 15,840 and especially low of 2021 at 15,665 are still key, as we've seen over the last 2 and a bit weeks. 15,665 has just above it a flatlining mauve medium moving average, currently at 15,685, and the green short medium moving average, currently at 15,745. Above these we have the dark blue July 24 to November 25 head and shoulders top neckline, currently at 15,975, and the gold long moving average, currently at 16,060. Meanwhile, below the market we have a 50% Fibonacci line for 2025 at 15,325, which acted as a base of action for the early part of the week 2 weeks ago, along with the newly drawn bright red middle tine, currently at 15,100 of the early October 24 to mid-March 25 bearish shift pitchfork. This middle tine is still not validated as yet, but the lower tine, currently at 13,820, helped halt the fall 3 weeks ago on a closing basis, and arguably also partially on a low market basis, along with the October 2020 low at 14,040. I'm now contemplating whether the action since at least March to date, and possibly as far back as November 24 to date, is a diving board pattern, a pattern that has a bullish recovery and reversal back upwards after a sharp drop. Thus, the action until the end of March could be seen as the diving board approach. The start of April until the middle of the month is the plunge, and since the first third of April, the recovery back upwards or the return to the surface and the climb out the water. Nearly 9 out of 10 such patterns see a move up to the base of the diving board, the 16,000 area. A quarter stop rising within the diving board, which would be here, I think, between 16,000 to 16,780 area. And about 2/3 of such patterns see a move higher than the initial approach onto the diving board. That is over the March high at 16,780. So far last week and this we have seen hesitation ahead of the 16,000 to 16,780 area, which raises a question mark about this pattern. It continues to be interesting to see how this pattern develops or maybe doesn't. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns that may have affected this market in recent times, all happening at the same time. The first is the thoroughly broken, but even now still refusing to die, old dark blue May to August 23 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, especially upper and middle tines. This one would not die. Even when I thought 3 weeks ago that it had finally expired, it still influenced the market and continues to do so today, especially the dark blue lower tine, currently at 26.31, along with the March 21 low at 26.27. I'm also starting to look at the newly drawn bright green mid-December 24 to mid-March this year bearish Andrews pitchfork. The market is currently in between the middle tine below, currently at 25.62, and the upper tine above, currently at 2800. Now, going back a bit, the declines 5 weeks ago was prompted by the break lower below the neckline extension, currently at 28.53 of the early January to early March this year reverse head and shoulders continuation pattern. So what else have we to look out for? Well, further down we have the lows in early August last year of 25.49 and 25.59 and 25.63, as well as the important 2021 low at 25.47 that prompted those lows in August in the first place. So far, they have seemingly been a base for this market. To this end, I would also draw your attention to another feature. One I highlighted 3 weeks ago, and I quote, "The March 2020 to date uptrend below, currently at 24.89, highlighted in purple on my daily chart. I'm not sure how good this will be, as it has been finessed a number of times before, but it's still nevertheless there and ought not to be ignored." End of quote. I suspect that the proximity of this uptrend has also been influencing the market's somewhat sideways action seen in recent weeks. Meanwhile, topside, I'd keep an eye on the 50% Fibonacci line for the whole March to April move at 27.55. This is not the whole 2025 action, just a major move in the last few weeks, as well as the nearby, the declining short-medium moving average currently at 28.05, and the medium moving average currently at 28.60. Now this last one formed, last two actually formed 3 weeks ago, a dead cross with the declining long moving average. Sorry, the medium moving average formed a dead cross with the declining long moving average, currently at 28.94. Now this is a lagging indicator, but it's still an indicator. LME 3-month tin. A market that technical analysis worked on quite well. So as in some of the other markets I've discussed, there are a number of patterns here affecting this market at the same time. Monday 3 weeks ago, the market halted right on the dark blue lower tine, currently at 32.295 of the November 23 to November 24 bullish shift pitchfork, bouncing back up for a day, but 3 Wednesdays ago, prices plummeted, down just below the July 2011 high at 29.005. On the way down, it passed through the nearby gold long moving average, currently at 31.355, and the mauve medium moving average, currently 31.595, closing below both before turning back up again for just 1 day in the middle of April before dropping down again, though not as far this time. Now, going back a bit, prices did also breach but did not close below congestion between 29.880 to 30.205, as well as the bright red neckline extension currently at 29.905 of the October 23 to January 24 reverse head and shoulders bottom. However, the move up has now become capped late 2 weeks ago and early last week by those same mauve medium and gold long moving average, plus late last week and also this week by the higher dark blue lower tine, with prices slipping somewhat easily above the 50% Fibonacci line of the March 20 to March 22 move at 31.845. Now, sitting above all these and a lot closer than it was this time last week is the purple neckline extension, currently at 32.445 of the April 24 head and shoulders continuation pattern. Yes, it's that one, the tall, thin one that I spoke about quite a lot this time last year. Further up, we have the short medium moving average, currently at 33.175. The neckline of the August to November 24 head and shoulders pattern, currently at 33.695. Then one of the previous all-time highs back in April 2011, up at 33.605. Until we reach the 50% Fibonacci line of the big April 25 move at 33.660. Do I think we might reach up that high? Well, right now I have my doubts. But this 50% Fibonacci line is right now a key level topside. We're a lot closer to it this week than last week. However, now I'd keep an eye on the dark blue lower tine, just in case. As I said last week, and I quote, we see the market try and run along the underside of it, end of quote, which we have seen these past few days. And also keep a watchful eye on the congestion below between 29,880 to 32.05. Now, one final thing. 2 weeks ago, I said, and I quote, I have been tempted to draw a new bullish Andrews or shift pitchfork for the late November 24 to mid-April action. So far, I have not succumbed, but I will be considering it, especially if we start approaching that 50% Fibonacci line overhead at 33,660. End of quote. Well, last week I succumbed and I drew a bright green late November 24 to mid-April 25 bullish Andrews pitchfork. We're right now approximately midway between the lower time below, currently at 29,800, and the middle time above, currently at 34,720. Now, I should point out, for clarity, this pitchfork has not as yet been tested on any of its tines.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.